In November 2024, when Donald Trump won the presidential election, Bitcoin was trading around $69,000. People called it the Trump trade. Crypto investors were euphoric. Bitcoin then hit $109,000, then $126,000, an all-time high. Fast forward to June 2026, and Bitcoin is sitting at $60,000. That's below where it was on election day. Every single gain from the Trump rally wiped out, and then some. So what on earth happened? Let's break it down. We discuss each of these in a separate section. Section 1. The Trump trade. When Trump won re-election, Bitcoin soared immediately to a new all-time high above $75,000, with analysts predicting even higher marks in the months ahead. And they were proven right. Insatiable demand from Bitcoin ETFs, which grew from around $37 billion in assets under management in January 2025 to more than $62 billion at their peak, helped push BTC even further throughout the first year of Trump's second term. The growing digital asset treasury trend, spurred by Michael Saylor's strategy, also created billions of dollars in demand as publicly traded firms raced to add Bitcoin to their balance sheets, including Trump's own Trump Media and Technology Group, which added $2 billion in BTC in July 2025. The momentum was unstoppable until it wasn't. Section 2. The all-time high and the crash. Bitcoin ultimately reached a peak of $126,080 in October 2025. But just days after hitting that high, it fell victim to a record-breaking $19 billion liquidation spree, dropping from above 121,000 to 106,000. In the process, Bitcoin briefly rebounded, but maintained weakness as the year concluded, falling further to around $88,000 as the calendar turned to 2026. International Business Times. From 126,000 to 88,000. That's already painful, but the worst was still coming. Section 3. 2026. The collapse continues. In January 2026, institutional investors began pulling funds from Bitcoin ETFs that had grown steadily throughout 2025, racking up more than $5 billion in net outflows in January alone. Then, geopolitics entered the picture. Macroeconomic uncertainty and geopolitical risks from the Iran war began to mount in February 2026 and still linger to the present day, increasing the likelihood of rate hikes, not the cuts that investors had previously expected. And just this week, Bitcoin fell as low as $59,099, its lowest level since October 2024, down 16% on the week amid a record streak of Bitcoin ETF outflows. The declines accelerated after Strategy sold a portion of its Bitcoin holdings, weighing on sentiment and forcing hundreds of millions of dollars in liquidations. Losses were made worse after a stronger-than-expected May jobs report sent Treasury yields higher and pressured risk assets further. Section 4. Why is Bitcoin losing its narrative? This is the part that should worry long-term Bitcoin bulls the most. Bitcoin's key catalyst for renewed investor interest, the crypto market structure bill known as the Clarity Act, is drifting further out of reach as legislative priorities shift and lawmakers remain divided on key provisions. Meanwhile, as uncertainty around the Iran war kept Bitcoin under pressure, the stock market rose to new records, causing investors to question both of Bitcoin's dominant narratives: that it is digital gold benefiting from geopolitical uncertainty, and that it trades like a high beta tech stock. The 30-day correlation between Bitcoin and the Nasdaq and SP 500 reached a near-perfect positive correlation just a month ago, but has since collapsed, meaning that while global equities, particularly tech stocks, continued reaching new all-time highs, Bitcoin failed to track the same upward trend. Simply put, Bitcoin is currently losing on both sides of its own argument. Section 5. Is this a buying opportunity? Not everyone is panicking, though. Strive CEO Matt Cole told CNBC that Bitcoin's fundamentals have never been better, pointing out that this is the 5th time Bitcoin has been at its 200-week moving average, and the previous 4 times were all the perfect moment to buy the dip. Others note that Bitcoin ETFs snapped their 13-day streak of outflows on Thursday, eking out a net inflow of $3 million, the longest outflow streak in ETF history finally coming to an end. So is this the bottom? Or is there more pain ahead? The honest answer right now, nobody knows. Final thoughts. Bitcoin went from 69,000 on election day to 126,000 at its peak. And now it's back to 60,000, below where the entire Trump rally started. The ETF boom, the corporate treasury trend, the political tailwind, all of it wasn't enough to hold the gains. Whether this is a historic buying opportunity or the beginning of a longer decline, that's the question every crypto investor is asking right now. Drop your thoughts in the comment.